if you can rate lunch. Can you rate lunch? Okay, so we won't try to do it now. Cool. Our speaker this afternoon is Wayne McCurrie, who will be speaking about economics and business climate, slow economic growth forecasts, increased interest rates, and a volatile rand. What you need to know. So let me just share with you a bit about Wayne, and then we'll kickstart the session. Wayne completed school at Kimberley Boys High in many years ago. As close to the year I was born, so out of respect, we can't say that. But I'll give you a hint. He studied at UNISA in 1979. Whoa. While completing his articles of clerkship in Pietermaritzburg, and then Wayne finished his articles in 1985. How come? How bon? And then he started his first employment with sugar manufacturer for 3 years as a management accountant. In 1988, he joined Lifeco Assurance, a company taken over by Momentum in that year. In 1991, he was appointed as a portfolio manager and chief strategist at Momentum Asset Management. In 2002, Wayne became the director of investments for SAACI Life for 1 year, after which he rejoined the First Rand Momentum Group as portfolio manager, initially with the multi-management operations and then to Momentum Asset Management. In 2013, that's close, Wayne transferred to Momentum Wealth to establish their private clients portfolio management business. Wayne appears regularly as a marker commentator on radio and TV. So please welcome Wayne McCurrie.
Good afternoon, everyone, and please excuse my voice. I've got a bit of a cold. It's always something when you hear your own CV like that and you realize how quickly time does go. And I also know that there's only one time worse to present than after lunch, and that's before lunch. So hopefully I can keep you all from falling asleep during the presentation. As I am, talking about my age, ultimately I think it's actually quite good to grow old, because then you don't worry about keeping up with all the latest fashions and all the latest shoes and the latest music and the latest hairstyle. You just are what you are. So for all you young people here, it's not that bad for growing old. Right, I'm here to talk about South Africa in May, but before you can talk economically about South Africa, you've got to understand we're part of the global environment. We're not isolated here. We're in fact probably more influenced by what happens outside of South Africa than what happens inside of South Africa. And that's really what I'm going to talk about. To try and put the last few years into perspective, and then to give an idea of what I think could happen over the next few years. It's always difficult to predict the future because that is, in essence, impossible to do. So it's just really my views of what I think could happen over the next few years. But maybe the most important point I want to leave here with you today is to talk about the commodity cycle. South Africa is a commodity producing country. We mine iron ore, coal, platinum, gold, coal, a lot of things, manganese, copper, and we export it. And the prices we get for what we export essentially determines how we do as a country. So in the good years, prices of commodities are high, we do well. In the bad years, it's because prices of commodities are low and we do bad. So let me try and explain that in a bit more detail. First of all, to start with what happens in the world, because what happens in the world affects commodity prices and it affects South Africa. So let's just look at the world very quickly. We had the global financial crisis 6-7 years ago now. The world from an economic viewpoint almost came to an end. It was actually disastrous. Quite frankly, we were lucky to live in South Africa because we weren't nearly as badly affected as other countries globally. But post the global financial crisis, the United States has been the strongest economy, or more correctly, shown the strongest recovery. And as a result, the US dollar has been very strong. The US dollar has been strong for the last 5 to 7 years. It's been by far the strongest currency in the world. So part of rand weakness, and we all know about rand weakness, is actually not rand weakness, it's actually dollar strength. Now, when you get such a very strong recovery in any currency, it actually starts to harm your country. I mean, we can hardly believe that in South Africa, that you would think a strong currency would harm your country, but it does. Your exports suffer, your companies with overseas branches don't make as much money, they suffer. So the US is actually quite concerned about the strong dollar. And interest rates are going to go up in America, but they're not going to go up as quickly and by as much as what a lot of people think, simply because the Federal Reserve is worried about dollar strength. As I've said, it's not all good news having a strong currency. Turning to Europe, Europe has not really recovered yet from the global financial crisis 6-7 years ago. They've had all the problems with Greece and all the debt issues in Portugal and Spain and Ireland, and they're only now really starting to find their feet. So they've had a very, very slow recovery, and they've kept interest rates negative. I mean, that's also another concept we do not understand here in South Africa. In Europe, if you put €100 into the bank and you go back in a year's time and ask for your money, they only give you €99 back. They actually take one of your euros. You pay, when you deposit money in Europe, you actually pay the bank's money. And that is for a very simple reason, is they don't want you to deposit the money in the bank, they want you to spend it to try and get the economy recovering. And by and large, this is working, even though it's taken a very, very long time. The euro should strengthen as a currency. It's been very weak against the dollar now for a while. And as the European economy recovers, the currency should strengthen as well. But most important for South Africa is China. The good years we had from 2002 through to 2008, by and large, were because of China. China became a major global economic power in those years, and they started to buy iron ore, and they started to buy platinum, and they started to buy coal. So the prices went up, and we, along with other commodity countries, Australia, Canada, South America, a lot of other African countries benefited hugely from the higher commodity prices. So what happens to Chinese growth is vitally important for our own well-being. The Chinese growth pattern looks quite stable. They used to grow at 12%, they're now only growing at 6%. I mean, 6% is very high, but it's not as high as 12. And the result of Chinese growth slowing down is that there's too much supply of commodities at the moment. There's too much platinum around, there's too much coal, too much iron ore. Because 5-10 years ago, everyone thought China would continue to grow at 12%, so they opened a new mine and they produced more goods, and they thought prices would only ever go up. And the best example there is the oil price. You know, in 2007, oil was $150 a barrel. Literally 5 months ago, it was $30 a barrel. That's the extent of the fall. Today, it's up at 50 again, so it is recovering somewhat. So there seems to be some stabilization in commodity prices because the excess supply is coming out of the system. But if China collapses, I don't think it will, but if China does collapse, we would go into a virtual immediate recession. We are that reliant on export of commodities to China. So the stimulus packages, they've cut interest rates in China, they've released a lot of bank liquidity, seem to be working, and certainly the demand for commodities out of China seems to be reasonably stable. So that part of the world, let's call it America, Europe, China, actually looks okay. It's reasonably well balanced. It's not, there doesn't seem to be any excesses. The economies are at least growing. However, when you turn to the commodity producers like South Africa and the rest of Africa, life has been very tough for the last 5 years. All we've had is falling commodity prices. So if you use an analogy of South Africa being a person, commodity prices is the salary we earn, and it's been falling for 5 years, and it's been falling strongly for 5 years. And ourselves, Nigeria, Angola in Africa, South America, Brazil in particular, Russia as well, Australia as well, we're all commodity producers, and we've had a very tough time in the last 5 years. So as a summary, the global environment actually looks reasonable. You know, I don't think much is going to change. There doesn't seem to be any excess debt in the system. The main economy seems stable, and next year will probably be a little bit better than this year, as I'll show just now. This is all actually quite supportive of South Africa. So there's no real external global threat that I see developing over the next 2 or 3 years that will adversely affect South Africa. But if China collapses, it will be very negative. I don't think China will, but obviously anything could happen. And that's the true big danger to South Africa. Just looking very quickly at what growth is expected. I mean, America this year should grow 2.5%, next year 2.5% as well, so that's quite stable. Europe a little bit lower, but certainly getting better, 1.5 to 1.6. China this year expected to grow at 6.5 and then falling a little bit next year to 6.2. So overall that looks good, but here's the bad news one, and Brazil is the worst example. Brazil's in a full-scale recession, minus 4%. Next year they're going to be 0. So here in South Africa we're about 0.5%, 0.5% this year, because we're not as reliant on commodities as what Brazil is. But certainly, they certainly wouldn't bid for the Olympic Games with the economy in recession. When they did bid, the economy was growing. So, you want to be very careful with countries that bid for the Olympic Games, because normally you only bid when you're really doing well and you feel rich as a country. And by the time it arrives and actually happens, you could very easily be in a recession. Same thing happened to Greece, same thing's happening to Brazil now. So globally, for the world, growth is going to improve a little bit from this year to next year. And as I said, that's quite supportive of South Africa. So turning to South Africa now, and sometimes it's best to look at South Africa in pictures rather than graphs and slides and numbers. So 10 years ago, life was good. We had electricity, we had water, we had money, we had strong growth. We didn't have any electricity, but that didn't really matter. And Julius was still in the ANC, so in fact everyone was happy. There wasn't a sad person around. And in fact life was so easy, life was so good. You could actually have a little sleep on the job there. There wasn't much to do. Everything was working quite well. But the last few years, things have become a little bit more difficult. Things aren't so easy anymore. There's not that many smiles around. There's not that many happy faces around. Life's not so easy anymore. I'm starting to get a little bit worried now. And in fact, things started to get tough. You started to sweat a little bit. It's not that easy now. Okay? Running out of money, deficits, capital expenditure, less income, rising debt. Life's hard. And in fact, I wish I could show this to everyone, and sometimes I do. By the way, that's him pushing his glasses back. And apparently in one of the speeches he did, he pushed his glasses up at least something like 72 times. You wonder why you just don't buy a pair of glasses that fit and don't fall off your nose. But anyway, and Des van Rooyen, otherwise known as the Weekend Special, was the best and most qualified finance minister for the job. But don't worry, I actually love Pravin Gordhan. The reason why Des van Rooyen is called the Weekend Special is he was finance minister for 4 days, of which 2 fell over the weekend. But I'm sure you all know about the credit agencies, and I'll talk about them later, and the possible downgrade to junk status. It didn't happen. Okay, and you must actually thank the president for it. Because the reason why it didn't happen is that there was such a crisis caused by the appointment of Minister van Rooyen as the finance minister that I don't know whether you could call it the true powers in the ANC or the powers behind the ANC actually forced the state president to appoint Pravin Gordhan, and it galvanized serious action within the government to avert a credit downgrade, and it actually worked. We did not get downgraded. And certainly 6 months ago, there was a very strong chance that we would have got downgraded. So sometimes a crisis is actually a good thing, because a crisis galvanizes action and gets things moving. And I believe we're moving on the right path now. I mean, we're going to take action on SAA, we're going to take action on the post office and various other state-owned enterprises that have been very poorly run and cost a lot of taxpayers' money over the last 2 decades or so. I mean, Eskom's even been sorted out now. There's a very competent and highly respected chief executive put in there now. So sometimes a crisis is not necessarily a bad thing, because when a crisis happens, you actually get action. Right, let's talk about government debt. Here is our South African government debt profile. And you can see how in the last, call it 5, 6, 7 years, it's just gone up. So it's doubled in the last 5 or 6 years. Now, this is not entirely the government's fault, by the way. And let me explain that. These were the glory years. These were the years when government debt actually fell, because there was more money coming in than going out. There was more tax revenue coming in than expenditure going out. And very similar to any one of us, when you earn more money, you spend more money. So the government was earning a lot of money, so they started to spend a lot of money. They employed another 1 million people in the civil servants. But most important, or more important than that, is the 17 million people on grants. Now, we could afford this in the good years. We could easily afford it in the good years. But what happened is the good years stopped. So in other words, the income fell. Commodity prices fell. Mining companies paid less tax. Our economic growth rate went from 4.5% to 0.5%. There's just less money around. So the big reason for the rise in debt is not because the government has spent more in the last 5 years. In fact, they're spending much the same or slightly less. The problem is revenue growth has fallen. And if you look at that, you understand it a little bit more. Now, at the bottom of that arrow, before it started to rise, our debt was incredibly low. It was about 20% of our gross domestic product, which by global standards is very, very low, or was very low. It's now about 50%. So it's not disastrous, and I want to stress that we're not on the eve of bankruptcy. We are a long way from that. There's many, many other countries in the world that are far worse than South Africa. But the point is, it can't get much higher without it costing a lot more money. In other words, should our debt continue to rise, we will get downgraded to junk status. And as I'll also explain later, essentially what junk status means is you pay more to borrow money. That's what it ultimately boils down to. Now, I've spoken a lot about the commodity cycle. And here's the commodity cycle, and these are the good parts of the commodity cycle. This is the up cycle. So you can see during the up cycle, our debt stays stable and might even fall because you make so much money from tax. Your economy does so well, the mines do so well, everyone pays more tax. But you can see in the areas that are not shaded, in other words, the tough times, debt goes up, and that's exactly what's happened now. So the old saying is very important. You know, when things just can't get any worse, they probably won't get worse. And as I'll show on the next slide, we've had a tough time here in South Africa in the last 6 months. It hasn't been easy here. But the mere fact that it's been so bad probably means it's going to get better, because it's highly unlikely we have a recurrence of so many negative things happening at exactly the same time. And the biggest negative is the down cycle in commodities. It is by far more important than politics or anything like that. Politics doesn't help, but politics has not caused the down cycle. Politics hasn't caused the collapse of the rand. Politics hasn't caused government debt to go through the roof. What's done that is the commodity cycle, and I want to stress that quite emphatically. The reason why we've done badly in the last 5 years is because commodity prices have fallen. The rand is so massively cheap because of low commodity prices, and it can strengthen quite strongly, but we need the prices of coal and platinum and iron ore, etc., to go up before it does that. I could be wrong, but currently mining companies are producing commodities well above the cost of what they're selling it at. So in other words, the average cost to produce oil in the world is about $80, current price is $50. All of those high-cost producers will close down, and the price will recover. So they might stay low for a while, but it won't stay low forever. In other words, the future for South Africa actually looks a lot better than the immediate past. I actually think the next few years will be better than what we've seen over the last few years, simply because commodity prices should turn up. As I mentioned earlier on, we've had a tough time these last few months, well, in fact the last few years, but it's been emphasized in the last few months. All of them, unfortunately, are negative. So the first thing, we've had the worst political uncertainty and lack of cohesion in the government since 1994, and there is no doubt about that. Now, I think that will improve, because it simply, quite frankly, can't get much worse. So I think it will improve. We've also had, as I've said a few times, very low commodity prices, collapsing rand, drought, and electricity. Now, these 6 things have happened all at more or less the same time. So that, by definition, it's very unlikely to happen again, because they are, in essence, relatively unusual. I mean, the drought is the worst in the 102 years. So that's unlikely to happen again next year. And the electricity side seems to be sorted out. Right, let's talk about the credit rating and this junk status. There are 3 rating agencies in those columns there: Standard & Poor's, S&P, Fitch, and Moody's. And the red block is the one to look at. The red block is a foreign credit rating. You can see Standard & Poor's is the BBB minus, Fitch is the BBB minus, and then Moody's is one level above that. But what's important is that in the table on the left-hand side, that's sub-investment grade, that's junk status. You can see on the S&P and Fitch, we're 1 level above junk, and Moody's, we're 2 levels above junk. So we're not junk status. And what's good about this is it's not as though these rating agencies did us any favors. I actually don't like the rating agencies. I think they've made so many mistakes in the past. But be that as it may, they still have a huge influence. The mere fact that they didn't downgrade us doesn't mean they've done us a favor. It's because they truly believe that this is not a junk status country, that things here are actually higher or better than other junk status countries, and that is actually quite positive. They look at it again at the end of the year, so this is not a one-off. I mean, we're hopefully going to be in a better position at the end of the year, but understand you're going to hear this story again later. Right, I've spoken the whole time about commodity prices. Yeah, they are in dollars. They go up and they go down. This goes back to 1974 odd, and you can see it's a cycle. When it goes up, South Africa does well. When it goes down, South Africa does badly. And as you can see in the last 5 years, on the far right of the chart, it's only gone down. And you can see how low it is. More than likely it's going to go up again. I don't know if it's this year. It could have started already. Commodity prices have already recovered a little bit. It could have started already. Maybe it only starts next year. Maybe it only starts in 2 years' time. But it's more than likely, given how low it is now, going to go up over the next 3 to 5 years. And that will be very good news for our economy. We'll go to a far, far higher growth rate. And the rand is a commodity currency. There's the rand in red. So when the red line falls, it means the rand's weakening. And then in that green color is commodity prices. It's one and the same thing. You can see that when commodity prices fall, the rand falls. And on the far right of the chart, you see that little tapping over the last 6. The rand has only strengthened because commodity prices have gone up over the last 3 to 4 months. Not because things are going better in South Africa, simply because commodity prices have gone up. Now, there's oversupply of commodities, that's why prices are so low, but at the moment, everyone's cutting production, and there's just some samples. If this production cuts, if the excess production being made continues to be cut, the commodity cycle, the prices will continue to go up, which will be very good news for South Africa. One of the last subjects here then is the rand. The rand, unfortunately, is a structurally weak currency, and it will remain so for the foreseeable future for a multitude of reasons. But ultimately, they all boil down to our economy is not as efficient as other economies. I mean, just to put it very simplistically. But the big thing with the rand is rand weakness should be about 6% a year, not 40% a year. And what this chart tries to show is where the rand is now compared to the 6% weakness. So if you look in the middle of the chart, at that 100 point, you'll see a solid black line going across the chart. In other words, if the red line was exactly the same as the black line, that would mean the rand's weakening by 6% a year. But you can see clearly the red line, which is the rand, doesn't do what it's supposed to do. Sometimes it gets too expensive and it goes above the line. So you can see sometimes it'll go up to 120 or 130 or 140, and sometimes it gets too cheap and falls way below fair value, and it might get you 60 or 70 there. And as you can see now on the far right, the rand now is as cheap as what it has ever been. So more than likely, the rand's going to strengthen for the simple reason it's fallen so much. You know, things don't fall forever and they don't rise forever. It's largely cyclical. And certainly when you put the commodity cycle over there, These shaded areas are the good years. These are the good times for South Africa. In the good times, the rand always strengthens. And we've had bad times now, the unshaded area for the last 5 years. So if I'm right, and we have the good years again, the rand will probably strengthen, and it could easily strengthen to 11 or 12 against the dollar, because that's actually where fair value is roughly now. Remember now the rand's 14.80 today. Literally a couple of months ago it was 18 against the dollar. So it's really strengthened quite a bit, and I think that will continue. Financial markets, I mean, they're not under major threat. I don't think there's any excess overvaluation or anything like that. In South Africa, it's very dependent on the commodity cycle. If the commodity cycle goes up, buy mining shares. If the commodity cycle doesn't go up, buy what's called the rand hedge or the dual listed shares. Looking at valuations, a very quick way to work out whether something is expensive or cheap is have a look at your dividend yield. In other words, what you get paid each year as an investor compared to how much you can get putting money in the bank. So in America, you put money in the bank, you earn 0.5%. You buy shares, you get a 3%, 3.5% dividend yield. So shares are not expensive. Very similar in Europe, very, very similar, and very similar in Japan. However, when you look at South Africa, our share market's not as cheap as those share markets. I mean, I'm not saying it's expensive and it's going to clip, but our long bond yields 9%, whereas your dividend yield's about 3%. So it's not overvalued because we have different dynamics here, but it's certainly not as cheap as other markets. But I want to show you this slide, or these two slides about global shares. And it's more about outcome than actually anything else. So concentrate on the right-hand side with all those dots. The bottom line is cheap to expensive. In other words, is a market cheap or expensive? The vertical line is how much money you made. So if you look here, if you bought shares when they were expensive, you were virtually guaranteed a bad return. So in other words, if you bought shares when they were expensive, you got anywhere between minus 50% and plus 20% return over the next 5 years. However, if you bought shares when they were cheap, you got anywhere between plus 50 and plus 300%. So the biggest decision you make as an investor is actually the share price, the valuation you pay today. So be very cautious. Shares normally only become expensive by going up, and unfortunately that's when people want to buy. And shares normally only become cheap by falling, and unfortunately that's when people do not want to buy, is after they fall. Our share market is not a South African share market. You can see that 71% of our share market is actually a global share market. It's not truly a South African share market. Only 29% of what happens on our share market is directly related to South Africa. 71% is related to global events. Financial markets, there seems to be a bit of a change happening now. Mining shares are doing well. So in the last 6 months, mining shares have given a 20% return, whereas consumer shares are given 6%. Whereas the last 3 years, things are very different. Mining shares are minus 1% and consumer shares are plus 71. So there seems to be a swing happening in the market now towards mining shares, because obviously the market believes we will get higher commodity prices, and that's right. Here's the valuation of our mining shares versus the market. And as you can see, it's the lowest in also 50 years. I mean, it's truly been a tough time. And when our mining companies do badly in South Africa does badly. You can see how low that is compared to some sort of normal valuation level that they should operate at. So they truly are. They're getting a bit better now because they've recovered, but they were truly hammered, and obviously we've seen that in our economy as well. Last slide, second last slide. Our bond market is the interest rate South Africa pays to borrow debt, or the more correctly, interest rate our government has to pay to borrow money. And there's South Africa, the little red dot. But what this measures is, on the vertical axis, is good credit to bad credit. So right on the bottom, you've got AAA rated, in other words, America and Europe. They pay hardly any interest rate for their bonds. And as your rating gets worse and you're going up from the bottom left to the top right, you pay more interest. And you can see South Africa, we pay one of the highest interest rates to borrow money in the world, even though we're not junk status. All of those countries around us there, they're already junk status. So in other words, the market was so convinced that we were going to go to junk rating, that it actually put us there without us even getting the downgrade. Now, obviously, without the downgrade, we should see maybe it's not quick, but we should see a gradual reduction of interest rates. Maybe it only happens next year, but certainly the pressure is off on the interest rate front. So our Reserve Bank might increase rates another once, maybe twice, but after that, they might indeed actually fall. So just as a summary then, can't emphasize enough how important the commodity cycle is. If I'm right, and it continues, in other words, prices continue to rise, 27 will be a lot better than 2016. We should see lower inflation, we should see a stronger rand, we should see lower interest rates, and we should see far, far better growth. And obviously, I hope that is what happens, and certainly it's my outlook. I mean, I'm just trying to guess the future, and that, as I mentioned right from the beginning, is impossible to do. But things actually can't get much worse than what we saw specifically in the beginning of the year, and I think we're actually over the worst, and that going forward is actually going to be quite a lot better than what we've seen in the past. So that's my whole presentation. Hopefully I've been able to articulate myself correctly. I don't know if there's time for any questions, but certainly thank you very much for the invitation.
Thank you so much, Wayne. I think that was very enlightening and very insightful. We won't be taking questions, unfortunately. We're behind.
You don't want me to go through my disclaimer.